Okay, good morning. It's 8:31 a.m. On Thursday, the 16th of December, and we're with you here from lovely uh, Cape Naples, Florida. Yeah, it's 2021. Yes, what a day and what a week we've had. Very, very quickly, no housekeeping stuff. We just a little bit hammered here. We'll get to you if we don't respond to you real quick. Our apologies. And we've been a little bit jammed. I'll leave it at that. You've seen how the markets are, and of course, I'll look at the housing starts. And we try to always play catch up. Dennis, good morning, sir. Welcome. Hi, Ralph. Good morning. Hi, Thomas. Good morning. Come on in. We're just getting started. Just getting started. Hi, Michael. We just went to record mode. Hello, Brian. Welcome, sir. Hi, Antonio. All right. So, as you know, we're doing this every Thursday now because we put every other Tuesday for our automated trading system as an open house. This we will keep up every Thursday. You only need to sign up once. We schedule it for you for foreseeable future. If you don't want to be on it, let us know. We'll take you off the list. Not a problem. Um, the other one right now is scheduled for next Tuesday. The only subject thing we have is subject to time availability. If we get very, very jammed, we will not be able to have open house, obviously. So we'll move it to another Tuesday forward. But this way we're good because of schedule wise. It's done in early in the morning for this one. For the open house, it's all day. Okay, both they use go to webinars, so not to conflict with our go to meetings. All right, that's enough of housekeeping. Move on. Let's move on to our first item, which is our economic calendar. Initial housing starts came in; they were very strong, and then jobless claims went up. So let's see what this one is. Okay, 1.152 was prior, revised down the tad. You can see that it's just a bit was revised down. Consistent with 156. They got 1679. Economy is doing very well. Okay, look at the data. Look at what the Fed chair said. Look at the jobless claims. Look at non-farm, including what do you call it? The revisions of non-farm. That's why the inflation is up. Now, one more item about inflation. Inflation is done TTM, trailing 12 months. It's the benchmark. What was our inflation last year? We had none. It was disinflation. We're in the middle of a disaster. So they've moved the goalposts. Nobody talks about that. I don't take sides. Understand the numbers. Go to BLS. Okay, BLS is government data. Download it. I posted it to clear up some of the people because I hear so much garbage on Twitter and Facebook and this and that because they go by headline. The data is not in the headline. The details, the devil's in the details. You got to go in there and dig it out, or go to a place that explains that to you. One of the two options you have: do it yourself, or someone reliable can get in there. Forget the headline. Headlines for news people and politicians and that crap. If you look at it, when we were pushed down so much last year because of whatever, I'm not going to judge that, mismanagement, whatever. Uh, but when look at the long bond, look at the 30-year, 30-year long bond or 10-year notes, was pushed down that low. Your benchmark has changed. We don't have this inflation that you think we do. For this year, we do compared to last year, but last year was a disinflation. You got to let this get back to norm. And we probably will take us another 6 months to a year to get there. Look, I can't find i9 chips right now. Well, I'm sorry, you can find the chip at incredible price, but that's not enough. You can't find other chips to have a built machine. I have an i9 machine here. Right now, backlog is 3 months. So if this thing fails, I can't replace it for 3 months. This has never happened before. So that's where we are. So temporarily, yes, we have a push up on inflation. So that of course, housing and is high, rental is high, but we'll come back to norm. We can't be at peak America. Nobody can afford anything. Okay, and take a look at gold. Look at where gold is. So, yeah. I mean, all these hedges they talk about, it's not going to work. Why? There isn't money to buy all of that. So the prices will come down. Yeah, it has to. Always has. It's a mean reversion. All right, jobless claims. Let's see what that is. I think it was up 18. Yeah, it's up 18. Okay, I saw that coming as we opened the webinar. Okay, Philadelphia Fed. These are all red reports, guys. We got to go through them. Good. All right, let's see. Wow, this is a problem. Okay, see that? This was Mid-Atlantic manufacturing and on December. This is kind of early, but that's a Philly Fed. Okay, so it's a survey of the manufacturing purchasing managers. Yeah. All right. Industrial production. Hold on. It's not updated yet. Oh, it's 9:15. Sorry, it's not updated yet. Okay, so yeah, you want to take a look at that. That's 9:15, and then you got the PMI composite. Those two we need to watch. Quiet here. I don't care about the balance sheet. It's terrible. $9 trillion. $9 trillion. But remember, two Princeton guys have saved us so far: Bernanke and Powell. I was never a fan of Yellen. She's a commie from Berkeley. Okay, Princeton's only not right wing but conservative Ivy League. So as the motto is the nation's service. Both of them have saved us, and this one I believe did a better job. Here's the reason. The tremendous problem we're in last year. If you compare it, and the data will come, historians, both financial and otherwise, will write about this. The data will show that we're in much more disastrous conditions last year than we were back in 2008. 2008 was a financial problem. Okay, last year was everywhere. We had a shutdown. We had a terrible shutdown, not just financial freeze, but we had restaurants, everything you get, the airlines, everything got froze. So because we had a shutdown, we had to. And I'm afraid next year they're saying there's going to be none, but maybe they're just warming us up. This Omicron is very bad, very bad. Just look at the data. Talk to some biotech guys. Look at the guys with PhDs. Yeah, forget the news. Listen to the guys with PhDs. Look at the guys with MDs. What they're saying. Okay, I have a number of biotech guys, biotech managers I know. What they deal with those investments. So you got to be at high caliber to keep up with the guys who run those firms. Look what they're telling us. Things that we got to be careful. Okay, I'm basically shut down. I'm not doing here much in Southwest Florida. I'm not going much out. Only food, go to dental clinic, that kind of stuff. Things I have to do. Something that Tico may need. That's it. I'm not doing any what do you call it? Discretionary expenditures, and that's not good for the economy. But this one, even is very transmissible. That's what the problem is. And the other problem we have, the hospitals are at peak. So it's not going to go away like a miracle. Yeah, no, it won't. We're going to be in this for a while. So, oh well. Let's move on. Let's go to charts. What a day yesterday was. As you all know, I had an appointment. I came back, and things were a little bit bumpy. I had one short that worked partially. The second short did not work, and I knew there was something wrong. And we can probably get on one of our ORB charts. I don't know if I have something here to show or not. Probably don't. I can probably bring a fractal in, okay, and then let's talk. We can look at that maybe here. There's a fractal. We don't do that normally, but here's a fractal there. You could see this is a. Hold on, this is 60. You could see this run up, or maybe I should put it off of this. I don't know. You could see the run up was just incredible, absolutely incredible. That's a reset, yeah. When we closed, is this the close there? Yeah, that's the close right there. Yeah. So as I see it coming in off of this level, this was it. This was the time. This was the time that. There we go. This short worked. Okay, this short worked. This partially worked and then it stopped. As it could not go through the center line, I said something was wrong. You guys probably heard me in the room. And on the way up, I said, I just can't sit here. I just can't sit here. And look, a little one up there came back, could not hold, and then took off. It was just incredible. So exhausted, absolutely exhausted. But that's what these crazy markets are we're in. So okay, I'll fix those later, guys. Make sure that we're on the right page there. Hold on, 1 second. There we go. Yeah, I got a tendency of forgetting putting a page back where it belongs, then continue going. So, but that's futures and it was very messy. Right now, implied opens 313 on a Dow. 67 negative. Remember, we were battered. We were battered here on the advanced decline. So we're beginning to come back a little bit. So market is a little bit better on the big names, but not all names. That's what this tells us. So we have some catch up to do, for example, on the smaller names. But the safety names like Amazons and Googles and so forth, a lot of money was parked there, even doing some of the pullback. I'll show you something interesting. Let me go there 1 page forward, then we'll come back. Look at this SQ. Now, this is closed last night, but this was closed night before. So even though we were here, the SQ was saying the boys have covered their puts. The deep out of the money puts are covered. That's how that low was. So it's important to pay attention. And look, what did they know? I don't know what did they know, but they had a good sense that. I mean, look at Moynihan. What Moynihan said, head of B of A, said yesterday morning. So they had a sense something was going on the upside with the Fed. CIs are staying positive. This is meaningless down here right now. Let's see. Same thing with Nasdaq. Retest of the 50. We didn't get it there. This was a retest in my view. It was close enough. This one didn't even get close yesterday. We bounced through for NDX on its 50 bar. Okay. You're not going to get a test of 200 until we got some problems. Not when we've been a long bull run here. But the 50 should be a key test area. So far, it's working okay. Okay. This was an anomaly. I've not seen Brett Trust to be this much below 40. It never goes negative. It's always positive, but never below the 40 line, and not this much. It often touches it, but that means it's coming back with a vengeance now. So 4,800. Oh yeah, I'd see at least 4,850 because that's 3 sigma. So 4,850 was my target here going forward. We're still long. Oh, we covered our short and held on to our long. But the short was early. I think we covered our short about here. Went long, it went against us, but we're still holding. So now the vol should drop. And as one of you asked, where's our trading? I said, listen, when the vols go up, remember this is an option trade we give you. When the vols go up, the chance of you being right drops dramatically. So there's no point of trading the option. We'll just give you the cash position we're in, our projection on the cash. And no, I know that's not ideally what you want to trade, but my job is not to throw you down a rabbit hole. Okay, can't do that. You can't, or to a well or something at nighttime. No, I can't just put a trade on because I'm long, but the vols are too high. I can let the vols come back down and then jump. So we will put a trade on that. It's not what you want, but I'm sorry. You and I don't pick the markets. Okay, we have to trade the markets that are given to us, and I've got to hold on to my role and what I do and what worked for me and for my flock. Not going to change that. Okay, yeah. I'm an SOB. Remember that. Good guys don't finish first. To stay abreast of it, you have to make some rules. You got to stick to it, no matter how unpopular that is. Remember, I'm not running for an office. Okay. We need to get into this. Let's do it through DT. This is Russell and transportation. Again, I just look at that chart. Never seen that before. Never seen one day all-time high change so much. Okay, but it did. So very unusual all-time high line there. Let's go to DT. It's a little bit easier. D-Trender. Okay. D-Trender. I know some people were asking what is this for. You got to look at always what the other guys do too. This is what the bigger guys do. The bigger guys always look at how far are they from the moving averages. Obviously, we have a negative here, 2. Okay. Oh, we just got 2. Interesting. This is 3, maybe. Okay, it's a borderline, but because we're at 50. These are SPX, Trans, Russell, and NDX against this 50 and 200 day. Okay. You do want to be in a for the continue to be in an up mode. You need to stay to see these 7 or 6 to 7 or all 8 to be positive. We're not there yet. We're getting close. We're getting close for this mood change to happen. Same thing true on the downside. If you recall, March of last year, March of 2020, almost everything was negative. That we knew, or I should say, early February, when that big drop came, when they went negative, you knew that's just going to continue. It's not going to be short term. And it was a bloody 6 weeks or 5.5 weeks that was just incredible. Yeah. Yes, we were short, but couple of days we went long for 2,000, 3,000 points on the Dow. We got to a point where I remember Jimmy Schmidt said, that guy who runs Time Digest, he says, "How do you pick these?" I said, "I don't know. Maybe it could be my tea. How do I pick this? I don't know. We're going to move $2,000 next day. All I know is that we're oversold. All I know is this. Local fear and greed. Now, you're going to have decent indicators to show you that. That's for sure. But local fear and greed. That's what we do on the system that trades the post-IV in the afternoon. People say, well, why did it turn there? I said, well, you know that was a fear line. You went to a fear line, stayed there 3 bars. That means it flushed out all the week longs. Then they're going to come in. They're shaking the trees, of course. It's called multiplier effect. They buy, sell, they buy, sell. They're not going to buy and hold on 6 months. No. They look at where the fear and greeds are and they do the multiplier effect. You need to think in those terms. If you don't, you're going to be a statistics. That's it. So this is telling me we're beginning to get normalized. That's a key word. Okay. Let's go to SP1 Momo. What time is it? 8:48. Okay, we got also. Okay. Very messy here, but it went to a buy system, our daily system. Monthly, weekly has been long. Monthly, the weekly has not changed. Very steady, moving up there. Some shakes, but nothing like when we were back in 2020. Now, CI stays positive, very positive here still, steady positive. Little shake up and down in the CI diff, but the CI itself, the area under the curve is positive. So keep that in mind. Crossing over, we had a cross here, not bad. Let's see what day was that. That was here, okay. And then it got into a shake. There was a kiss, came back and took off. All right. Now, high and lows. That's good. I don't want this number to get too big. Okay. If the number gets too big, we're beginning to peak. You see what happened there? Yeah. When it gets too big, too big, we have a pullback coming. It did. So it happens on the extremes. Now, when you get too many 52 weeks lows, the bottom was there. Again, fear and greed. Okay. 1.34 there on Momo. On SP1, we're near plus 1 sigma. Again, getting back to normal. We're not rising like we were here inside of the plus 1, plus 2. This is plus 1, this is plus 2 sigma. Okay. Why these are important? Very simple. Not because I say so, but it's a natural vibration in nature, the sigma challenge. So pay attention to them. VIX. Okay, VIX is coming down. Yes, we need to go more. This is today, though, by the way. Remember, this is the only one that trades pre-open. But we had the outside bar yesterday. Yeah, nice reversal there for sure. I don't pay attention to my VXO because it's also USO. It's not out of. This should be. That should be a G contract. I'm sorry. 1 second. Let me fix that. I have just so much going on. Unfortunately, I can't. It becomes very transactional. That means I see a problem, I gotta solve it. Same thing I treat my team. If there's a problem, you guys go and solve it right now. Don't wait for it, because we're gonna get behind. We gotta forget something else. Okay. All right. Good here. All right. Now, nice reversal there too. I've not seen these charts, guys. I've not looked at this last night. No, I didn't. Had too much going on last night too. Just to look at it this morning. Nice one on Russell. Big one on Russell. That's a huge reversal. Okay. So that tells me all other things being equal, ceteris paribus, we should move up gradually. By the way, historically, seasonality speaking, post December FOMC, market gets very calm. This almost because the volume drops and the bias goes up. Does it work every time? Not necessarily, but that's the track we're in. So that should be. If you're in shorts in some positions, I would take a look at it very seriously. Okay, from now to the up to yesterday, you were okay. Yesterday, His Royal Highness Jerome Powell changed everything. He is the king of the world. If you think about it, the more powerful man in the world. Nobody's. Listen, what are we going to do with the nukes? Nothing. We're not going to do the nukes. So it's the money. It's a fountain pen, and he's the king of the world. So he decided we're going to go up. So rejoice. Exactly. Okay. Just look at that. Just look at those shorts that were there. I mean, I was a little bit early on. I was in some pain, but I just finally said, throw in the towel, take the other side. Turn on the the J2s. What do you call it? The rockets that you turn on when the C-130 wants to take off at full throttle. Yeah, 4 on each side. The back door. It opens up and you just take off on a short runway. That's what it was. Just and went. So, oh well. And now we're up another 22 handles on S&Ps. Hallelujah. Okay. We are, I think next week, let's see. Where's the expiration on these? Hold on. VIX, G, where's our volume? Okay. F is still lead. Okay. This is a January, is still lead. No, we're okay. No, we're okay. So this is the right one. This is real long. I'm looking at the spread. The spread is long. February. No, Murray, you're killing me. I'm glad I checked. Look at the volume change. Okay, so let's fix that. We gotta look at live data. Hold on. I mean, it is live, but it's not what we want yet. So this is F-22. Hey, next year would be F-23. My favorite aircraft that was never built. Then two that we did VXJ, I think it is. Is it? No, VXJ-22. Hold on. Yeah. Okay. This is April. Jan, Feb. So we're long Jan, short Feb. I mean April. So go here. We're going to take 21 out. VX H22 and VX J22. Okay, we're good. Okay, so we can see the spread. I can see the volume. All right, makes sense. We're long January, short April. All right, good. And now, what's that value? 343. Okay. What does it mean? With all of this for that, yeah. When it gets to 0, that's the bottom. When it's around -3, -4, that's near the top. So far it's okay. We're in that range. Okay, now, one exception is part of last year on, not the first quarter, but from after first quarter of last year. Some of these were so bad, these VIX numbers were so bad, that we had to adjust for charting purposes to get the meaning right. So just keep that in mind. We were going to go back to that realm. So it's a little bit confused what those levels should be, including myself. So I my benchmark for that is -3, -4, where the top would be. So 3 used to work. -3 used to work very well, but those were This was pre-2020. Last year changed. Okay, my favorite indicator, SP2, 60, almost 62. We're heading back up. At 75, I'll be worried. So I think go long for now. Okay, and remember the bias from Christmas to New Year, bias is always up. But I would humbly submit to you that post the FOMC, you get that bias these days. So we're going to see that. Rendezvous point is beginning to turn on a long-term one. On the stock RSI, we should see it somewhere between 80 and 90s shortly. I don't see it to go much past, let's say 92, 93, but that's what we're looking for. All right. Treasury yields. Very quickly. Okay, this is where there was a peak of people complaining about. Actually, the week before was where the inflation could be, where we're heading. Obviously, with the peak on oil and coming back, that came back down. Also, the inflation scare and also jobless claim that reduced that, and we got into a more stable setup there on the long term. Sorry, should be good now. All right, so now remember these are based on prior months range, so fairly steady below pivot. Okay, below pivot. Exception is maybe this morning by a 30-year. Okay, so short term, very short term borrowing, commercial papers, 5-year for cars, automobile financing, housing, long term financing of, let's say, insurance obligations. Okay. What else do we need to look at? Oh, let's go to this, and we got to go to this. There we go. Oh, yeah, this is my favorite. Okay. As I warned you last week that this was huge drop. This is huge drop, and it's also getting to where my line in the sand would be, 55 to 45 area, as in the past. That's this area we always watch for. Nice bounce at 55, came back up, but shape of the curve and the shape of the two moving averages, 20 and 50, not good. It's still telling us a lot of people are hiding in the big names because this is percentage of stocks above 200 day. The overall market we have today, I mean, we had, let's say, last year this time, about 12 months ago, where everything was steady and all were participating. This shows lack of participation of small names. So I would pick my names carefully going forward right now. Yeah, this is not good. This trend is not good. That's a warning sign to me. So I will keep watching it. Remember, this comes out. You can get it from Stock RSI. Here's the symbol, and wait for an hour after the close for it to update. This does not do up intraday. It's good after the close. Okay, overnight. Here where we are overnight. Let's see. Come on. And then I'll take your questions. Where is this? Hold on. Where am I? Why is it not? Hold on. Why is it not coming down here? Come on, mouse. There we go. There you go. Sorry. There we go. Okay. This is what we've done overnight. Obviously, this has to change. CLG22. That's a February delivery. Okay, we are 1 month ahead always. Let's that cleared up. Okay, there we go. And so these are the hourlies. I always run this on one of the screens on the background. Just give you a perspective, give you a cool perspective aside from all other funny, fancy, schmancy indicators. Just let me know what's going on there. You could see the volumes. The volumes were just nuts yesterday, last hour or so. Sigma levels, all that, but we're still up another 24 handles. That's 240 right now. The CNBC is showing implied Dow to opens 301 for the open. This is just massive. And what do we always talk about? Wednesdays before option expiration, a trend change. Hallelujah. Hallelujah. The king delivered. So all those puts the people bought Monday from last Friday to yesterday morning, kaput, gone. Now, wait on how they're going to do tomorrow. Why? Because it has to do with all the calls we bought, all the calls that went in, including today. So fear and greed, this multiplier effect. Okay, that concludes my presentation. Hope you had a good week. Hopefully, we'll have a good next couple of weeks. We'll be back to very, very normal operations come January. But for now, I think they're steady as she goes with the up bias is a norm. Any questions for me? Again, thanks for attending these. Okay. Could we be heading toward the Michael Becker writes longer term consolidation like the Russell did? Let me go to Russell. Good question, sir. But let me go there so I can have some guidance. Okay, let's go here. Okay, this is Russell. Okay. Okay, to me, Russell is very, very econ sensitive and somewhat interest rate sensitive because of their balance sheets. They don't have the big equities that we have in the big caps, right? This is small. This is also 2000 small caps, and so they're crucial for NDX taking off. And right now, we're getting a W. But yes, you're right. You've had a massive long-term consolidation. Uh, if you get to a peak environment, that's what you're going to do. And and I would submit to you that that's what Russell was experiencing. It got into a peak environment. Look how many new highs it made, and just went and get exhausted. That's just going sideways. Why? Nothing dramatic has changed from this point on for them in their lives this year. Nothing the small Russell 2000 has changed. Again, part of it is people parking the big money in the big names. Interest rates need to stay steady, no spikes there because they're cost sensitive. They're interest expense sensitive, I should say, and but they only flourish when the economy as a whole goes forward. And obviously, the CPI high reading, no matter what the benchmark is, again, that's a nuance we have to pay attention to. Headlines won't. We need to. But with the CPI give us a flash warning there. Yes, it caused a problem for the Russell names to pull up. Remember, there's about 30 of the names, about 40 of the names, if I'm right, of the Russell 2000 that control Russell in terms of predominance, in terms of because it's also not a market cap index. So if they're not faring well, the index won't. But can we go there ourselves and be in that mode? This whole concept of peak America is an issue. Okay, we just can't have rising prices and demand this that. Housing, automobiles. We just got the issue is affordability. Yeah, if we hit that area, we could go sideways for a while, and we could be not where the next dollar is. So, but who can guess that? I don't know. I think most people who are prognosticating the futures have not done well. So, and that includes myself. So, we just have to do a better job. I just don't know. So, but that's a very good question. When the look, when the moves are very small, it's very hard to explain. It's noise level. So, yes, we could be a noise level for a while. What I don't want to get involved with, I don't want us to get to, is what unfortunately I experienced when I first came to this country. I mean, first I was having a paycheck, okay, which was late 70s. I came here early 70s. But to late 70s, we got the stagflation. That's very tough period. Now, I was shielded in a way because I was in defense business. And what I was doing was growth. There was no question. Then Reagan came in and really boosted everything we were doing on the defense side. But average person was a very tough situation. Outside of maybe some financial environments in New York, most people's jobs did not go up, and yet the inflation was creeping up. That stagflation was very, very difficult. I just don't want to see that. And we haven't seen it since then. I hope we won't see it again. It's a very bad psychology. So, anyhow, with that said, I'm closing this. We got to get on the other side. We got to go make some money. Talk to you guys soon. See you guys next Thursday. Okay? Thanks.